Okay, what is up, Trading View? Hopefully, you've had a good day. Hopefully, you had a good and successful trading day. Maybe you stayed out of the market. Maybe you didn't. Either way, that's fine. We're going to be doing a top down analysis of XAU USD. However, before we jump into our top down analysis, like we always do, some cool things happened. Yesterday, we got selected for Editor's Pick. So, shout out to TradingView. That's my second time being featured for Editor's Pick. I always love being featured on there. Yeah, it's cool. I started trading 5 years ago, and if you would have told me, you know what, look, it may not be a big deal to some people, but how you do anything is how you do everything. And how you celebrate the small stuff is how you're going to be celebrating the big stuff. And I just want to take a second, celebrate that because, growing up in a small town in Alabama, I would have never guessed in a million years, one, I would be trading. I figured I'd be helping my brother out on his farm. But instead, I'm sitting here trading and being featured on a huge platform such as TradingView, which is, cool within itself. TradingView is such an amazing platform. They have, millions of users, and just to be featured on there for, any type of video is phenomenal. So, shout out to anyone that's been selected for Editor's Pick. Congratulations. It's awesome. And we'll just continue to mark up from there. That's all we can do. We can just show up, and we don't want people to just follow us. We want to help people get into position. So, with that being said, let's go ahead and jump into our top down analysis on XAU USD. So, I stayed out of the market yesterday. Like I told y'all, there wasn't a ton going on inside of the market. So, I decided just to take a back seat. Let me cover that backlight up some. I decided just to take a back seat. Usually, when price is hovering, even on the weekly, there's not a ton going on with the candles, but especially on our daily, we're just kind of floating inside of this range right now. Um, and then when we drop down into our 4 hour, you can see it a lot better. I actually kind of want to see something here. Okay, yeah, a little bit of a trend line that we kind of got off of this. Eh, kind of not really. The bottom one applies, but not so much the top. This is our 4 hour time frame. Let's go ahead. I'm going to show you how I marked this up on the 4 hour. You're left with this bit of price, and there's a couple of things that happened here in price. One, we had a break of this little ascending here for price to come down. I was watching this top area there, and I'm watching to see how price reacts between these two areas here. So I want to see price either come down, break below, give us a flag, and then a move down. Delete this off. Let's just grab our pathway. So I'd rather see price come down, clearly break, get us some type of bigger flag before we move down further, and to see if we get a rejection even off of this bottom. Rejection for price to come back up, give us another flag, come back up, barely break that high, come back inside, and then we would look for some type of steeper flag, maybe grabbing some lows that it forms before pushing higher. If not that, then we would love to see price reject off of this, come down, reject, form a bit of a high, maybe a little bit of a steeper pullback before coming up higher. So this would be an option. You'd be almost getting like a flag here. That would be something I'd be curious to see play out. If we do get a rejection down here, I'd love to get a strong move back up, catching the flag, then taking it into these highs here. That would be a position I'd be willing to take, especially because we never grab these highs, right? It's unusual for price to not grab those. See how it just kind of stayed away from it here. here, here. So that's 4 times it failed to go up and grab these highs. So something I'm keeping in mind, just like now, like if we get another failed rejection, just comes down, it doesn't grab those lows, instead comes up and then wants to grab highs up into this area. I'm still going to keep this in mind that it never grabbed this low, just like it hasn't really grabbed this low. Now on a smaller time frame, it did grab it here, but since we're on the 4 hour, this now becomes like our new liquidity zone, which also matches up with our extension of our trend line, just like that. So delete this off. Let's go ahead, jump down into our 1 hour time frame. And then it occurred to me when I got off a stream yesterday that I never showed you my entry that I had. Right there it is. Yeah, I never showed you my trade that I had the other day on the 1 minute time frame. It was on the 5 minute and 1 minute to go and target these lows, which we finally got, but it wasn't that day. Look, that was September 1st, and now it just hit those September 3rd. So that just goes to show sometimes that price doesn't always work out the way you want. You can take the trade, right? So I had it coming down to this low to see how it reacts. It rejected, pushed back in. We took our profits out of the trade. We were done. And then now that I'm on the hour, there's a clear flag that formed for us to come up, kind of give us this 1, 2, and we get this arching pattern where it shows price momentum slowing down. So let me do that again. We had a rejection there, rejection here. Smaller moves in candlesticks, price slowly comes up, grabs these highs, and then we look for some downside. Barely missed the target here, but in reality, a rule that I was taught very, very early on in trading was price only has to fill 90% of this move. It doesn't have to come all the way down on this trend line, right? So this was my trend line here. I was looking for once price broke or rejected 1, 2, 3 times. We got a flag, and we were looking for a move down, which it gave us. But price isn't perfect. So the rule that I was taught is you would just look for price to for sure fill 90% of your move. So if I go up just 90% of this ascending, it'd be about right here. And boom, it did. It filled about 90%. Really, it filled about 97% of the entire ascending channel here. Beggars can't be choosers. So, and I don't really like that term. It's kind of like negative self-talk in a way. So I might not ever use that again. Shows you how my brain works. I'm not a big fan of that. Self-talk is so important. Not just like it's important in day-to-day life, but it's especially important in trading. The inner conversation that you're constantly having with yourself will show up time and time again on the chart. So if you're already like in your head, say you had to work that day, and at work you're just like maybe you aren't even trying to. Maybe you get around some negative people, and you're hanging around these negative people, and they start complaining about work, and then you just kind of get sucked into that vacuum, right? And you get sucked into the greater force at hand, you not being the greater force at the time, but you get sucked into the greater force at hand, which is the negative, talk that's happening. And you start participating in it. Oh, work sucks, blah, 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 this, blah, say, blah, that. These people don't know what they're doing. I'm tired of this person. They never pick up the slack. And then you come home from work, or you're at work, and then you're trying to place a trade while you're at work, or you're trying to take trades while you're at work, or you're even looking at the market while you're at work. Now think about this. You're looking at the market, which is completely objective, but on the other hand, you are already set in a negative mind frame, which means that you're in a negative headspace approaching in a completely objective market. So you're coming in with a set mind frame to a market that has no opinions whatsoever. So now you have this negative mind frame, and you may think it doesn't affect you. You're like, oh, I'm not the type of person that bothers me. Well, guess what? I guarantee you are. I bet you it throws you off such a small fractional amount that you don't even notice it. It's not just it doesn't affect you in just the big ways. Maybe it just affects you a tad and just like you see the trade set up there. You want to take the trade set up, but you're already been so negative in your self talk and your inner dialogue that your inner conversation is already planted with a negative base, right? You planted that negative seed, you watered that negative seed, and now your mind is already thinking negative. So it's not just you talking negative to yourself inside of the conversation, it's you have a negative outlook, you're looking through a negative lens and how this trade might play out in the future. Or you have a negative outlook on, did I really mark this up? This didn't really work out for me last time. It's the little stuff that all adds up. So that's why I take it so hard to take serious. And look, if I can give you just a second, let me grab a book that I can recommend. Da, 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 where are you? Just a second, Trading View, I promise. Da, 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 da. Aha! Here it is. Boom. Norman Vincent Peale, The Power of Positive Thinking. Okay. I'm not gonna find one and read to you. However, I do highly suggest this book. This isn't the book the end all to be all, but it helps to have this stuff. Just have this stuff around you. Read a couple pages a day. You don't have to read this entire book, but you just need to plant positive seeds in your life, and this is where it starts. Books like this. So let's drop down into our 15-minute time frame. Price doesn't really do anything. There's not a lot of momentum entering the market. You know what I can do? If I'm not seeing anything there, I'm just going to flip my chart. Let's delete these off. Cool. Did this ever get tagged? No, not really. And you know what? It's not even that, because that one's for here. This little mark. Gonna give y'all a little bit of free game. It's this one. That's how we got this rejection back down here. And that's actually, if you go back, I had that in the markup. So now the market tricks you into thinking, now this could still be valid, but it's not as valid as this one, which sounds crazy, but it's true. This one's not as valid. So now what I want to do is I'm not going to keep that as, weight inside of my trading decision. Now I'm going to delete this off. I'm still going to keep it in mind. It's not that it's invalid, okay, but I'm going to add a little less weight to it. The way that I do that is I add a trend line and just make it a dotted line. And my dotted line inside of my mind isn't as strong as a horizontal ray. Okay, my horizontal ray shows significant trend or significant liquidity zones, double tops or double bottoms for me. Trend lines that have a dotted line, they hold weight, but they're not as significant. So that's something that I'm going to keep in mind. But here, this is something I want to pay attention to right there. Or on the 15-minute, I'm going to get down to the 5. I still want to show you that markup, so I'm not forgetting about you yet, I promise. Perfect. That's the one I want. So what I'm going to do is see how the market comes down into this area. I want to see how it gets down here, rejection, and then I would look for price to go back in this direction for some lows. But if I'm looking for buys, want to see a break below, maybe form a bit of a bigger pattern, start to come back down here in this area, and then I would look for some more highs. You're saying, but chart's inverted. So there we go. We inverted it back. That's how I use invert my eyes. I started trading in 2019, I think. So a different market for me during that time. Why am I not using this one? Okay, great question. Oh, because it got taken out off of this right here before the market moved lower, wick back up, tried to grab those highs off of this wick here. It didn't do it, so now that becomes my liquidity zone right here. I teach this stuff pretty in depth inside of a bunch of my other markups on here as well. So feel free to go to the TradingView channel. You'll see a ton more of those markups. I cover a lot of in-depth stuff on here as well. So not a ton going on for me. Like I said, we're still ranging. Don't waste all your capital. I just had this conversation yesterday, right? Where you want to, when you're new in trading, or even if you're not just new in trading, but you're trading in general, we have this perception that success in trading is equivalent to motion, or yeah, to motion. And maybe it's not even just motion, maybe it's just like movement. But movement can also just be running in place. It doesn't mean you're going anywhere. Okay, so don't just be trading just to trade. Make sure you're taking good trades. Like for me, like what there's there's nothing there. There's literally nothing there. Like I can see how it reacts off of the zone. Maybe get a little test, flag, drop down, maybe come down, grab these lows. But like I want to be on the sure side of the market. I want to be taking good trades. And that reminds me, let me go back in here. I'm going to show you now the trade that I took the other day. I totally forgot to mention it in the markup yesterday. So we had this break here. We grab a trend line. I saw the market break here. I saw the lows down here in this area. This is what I was targeting. And now we were here Friday, Monday, Sunday, Monday comes back up. Perfect. Here we are. Right here. Oh my goodness. Liquidity zone right there. Smaller time frame liquidity zone. Drop down to my 5-minute. And we ended up getting the trade. I took it a little early. I'm going to be honest. It wasn't a perfect trade, but I took it a little early. Here's what I was looking at when the market was moving, or it's kind of consolidating. When I saw it kind of stalling out up here, I saw this as a potential liquidity zone. It ended up coming up and grabbing it not just once, but two more times where you could have got in off of just this one liquidity zone. But I took my short here in the market. It's like right here, stop loss above liquidity. And then we were targeting the lows down here, which obviously we didn't even get. So just whatever. So I was looking for the lows down here, 300-point move. I mean, kind of a big move, but not really, not on gold. But if I was just targeting my lows here, which is my first, area I'm paying attention to, I was still 90 pips. Market comes down, rejects, comes back up. As soon as we get pushed back up, we're closing trade, and that's still for 3%. So good trade. And then I end up taking a loss. Where did I take a loss? I'm not sure, but I'll cover that in our next market session. Till then, be safe out here in these markets. You feel me? Don't be taking trades in random spots, and be sure to Follow us on TradingView and go watch the rest of our content. Until next Asia session, peace.